oil and gas industry stakeholders have commended President Bola Tinubu over his administration's economic policies, attributing the recent reduction in the price of petrol to the gains of the policies. This latest commendation is coming from the Southwest Zonal Chairman of the Independent Petroleum Marketers Association of Nigeria, Mr. Dele Tajuddin, earlier today when he appeared on our flagship Business Nigeria program.
It is a necessary decision that has to be taken in the best interest of this country. So it has come, and of course it was difficult when the decision was made. No, still very difficult, but at least we are getting used to it. And I want to let you know that there's no policy with advantage that doesn't have disadvantage too. But going by the advantages that we have realized in the industry, let me just talk about the price first. You will recall that when it was announced, the price of petrol is about 1,200, 1,250 per liter.
Yes.
Today, I can tell you with facts that NNPC retail is selling at 925. MRS, let's use Alakwere as an example. MRS is selling at 985. There's Eden Petroleum at Alakwere. There is Total. Everybody is selling different prices, but within the, good range.
Yeah.
So everybody says. So it has dropped from 1,250, 1,200 to 935. So, and we expect more of that.
Well, let me take you to the stock market, where first day of securities transactions at the NGX exchange this week recorded drop in prices across sectors. The prime market index that measures movement of prices crashed from mid-trades by 11%, underscoring losses on investment. First Bank Holdings, currently managing quarrels among shareholders, ended deals as the heaviest price losers, in calculation above 5%. Those that followed included Transcorp, United Capital, UBA, and Access Holdings. Africa Prudential Insurance was a top gainer with nearly 3%, followed by Total Energies, Oando, Zenith Bank, and NASCOM. The volume of business done on the floor moved above 500 million shares. Well, stocks lead broadly in Asia today, while the dollar hit a 14-month peak on the wake of strong payrolls report that pushed up bond yields and tested lofty equities valuations. Just as the earnings season gets underway, S&P 500 futures fell 0.4%, Nasdaq futures 0.5%, adding to Friday's pullback. The European stock 50 futures, FTSE futures is 0.2%. DAX futures were almost flat, and holiday in Japan made for the thin early trading today. And MSCI's broadest index of Asian Pacific shares outside of Japan edged down 0.4%, while the Nikkei was short futures traded down. South Korea stocks eased 1%, with the political situation still in flux. Chinese blue chips were off 0.2% as data showed export rose at a surprisingly steep of 10.7%, and imports added 1%. All right, finally now, crude oil prices extended gains for the third straight session today, with Brent rising above $81 per barrel to its highest in more than 4 months, as wider U.S. sanctions are expected to affect Russian crude export to top buyers in China and India. U.S. West Texas Intermediate crude sells for $78.44, up 2.44%. Brent is up 2.22%, selling for $81.53. Bonnie Light is down 2.84% to sell for $78.62, while OPEC basket sells for $76.93, up 1.13%.